Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the S&P ASX 200 rallied into the end of the week on market optimism that President Trump will strike a deal with Iran to end the war. Sean Hickman from Market Matters says while the local index has lagged in recent months, underlying investor sentiment is strong and is supported by the technicals.
I feel that the markets want to go up. They're trying to go up. It's a little bit more muted on the ASX and parts of Europe. The ASX obviously has got the big four banks that are struggling. That's up, give or take a cappuccino, 30% of our market, whereas the resources are still very strong. So looking at the index is one thing. Looking at the stocks and the sectors is really the way to go. There's some very interesting dynamics at play, but one of the things I wanted to talk to you about today is that there's cash. There's a lot of money out there. There's a lot of liquidity. We've seen how much money's poured into SpaceX. But there's more money out there. There's money looking for a home. And that's where the ASX is going to throw up opportunities, in our opinion, in the second half.
Well, the largest stock on the S&P ASX 200, BHP, has pulled back recently, but Sean Hickman sees that as a buying opportunity, with the copper price creating a tailwind for the stock and the whole sector.
We believe in the AI infrastructure build-out, global electrification, more EVs coming on the market, all the stories and thematics that everyone knows. But one thing we have to be slightly aware of is volatility. People are very nervous at the moment. We hear that a lot of market matters. People get nervous when some of these stocks and thematics pull back. And copper is a very well owned position now. You won't get many people sit opposite you, Andrew, and say we're bearish copper. It's overcooked. So that's why you're getting pullbacks like we are. BHP recently pulled back 10% from all-time highs in 4 or 5 days. And I think we've got to say that, or we feel it's going up. But the volatility will get a bit higher as we go higher with it,
Well, in fact, because copper has been the best performing metal for BHP, hasn't it?
Oh, without doubt. And BHP has reinvented itself into primarily a copper producer. Over half of its revenue is now from copper.
Yep.
Obviously, potash will kick in a few years' time. As it's done a really, really smart thing. It's started to transition away from iron ore. It called that trade early, and it's benefiting from it now.
So when you look at that chart, then, Sean, has pulled back a little more recently, but are you seeing that uptrend intact?
Totally. As far as we're concerned, it's a bullish trend. It's going up, but with increased volatility. So every 10% pullback like we got last week, we feel is a buying opportunity. We've got a very large, it's our largest holding across our portfolio. So we've got our money where our mouth is per se, and we are not at the moment considering taking a profit on BHP at all.
News of a potential Middle East deal saw oil prices drop sharply. But Richard Weissman from Weissman Consulting argues that the WTI price is largely being determined by the technical setup.
Got resistance overhead at 105. You can't see it on this chart because this is a July chart, but there is resistance levels around 120 on the continuation chart. That was the big spike up we had when they first announced the closure of the strait. And above that, we have historical resistance even all the way to 120, 130, and even 150. So we are really fighting here, Andrew, because the problem is that we're approaching tank bottoms in Asia, maybe a month away in Europe. And if that hits, then we'll really start aggressively bidding up price until we reach that tipping point where you get demand destruction. It's interesting because it is a double-edged sword. Right now, what's going on is that all sorts of Gulf producers are creating new pipelines that are going to bypass the strait. That means more flow coming out of that area. And in addition, the U.S. has been incredibly aggressive on increasing the flow of oil from the United States. Other non-OPEC plus members have also been incredibly aggressive. We've seen all sorts of bearish things, like UAE has actually left OPEC. So there's a lot of oil that's going to come to market.
Well, that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.